Guys, in this video, we're going to talk about moving averages. Now, moving averages are an important part of our technical analysis as it can give us tips as to where the most recent trend will be going. So when we're talking about moving averages, basically there's two types. There's two basic types, that is. There's going to be the simple moving average and your exponential moving average. These are also known as SMA or EMA. Now, the SMA simply calculates an average price of data. So what we're looking at when we look at the simple moving average, you can see on our chart here, we have three different moving averages. And this purple one is going to be our 50-day moving average, simple moving average. This pink is going to be our 50-day exponential moving average. And this orange line here is going to be our 200-day simple moving average. Now, what we're looking at when we just look at plain old simple moving averages, we want to see tightening, we want to see separation, and we want to see crossovers. So three different things that we're looking at when we're watching this. So you can see back here in around June, July, we had this lower moving average, this 50-day cross over this 200-day moving average. Now, when you have the 50 crossing over the 200 on the daily, that is considered a golden cross, and that is a bullish move. And you can see that's exactly what happened. We crossed over, and then we had a nice bullish move here. And then after we got that big bullish move and we ended up hitting that high in mid-September, we actually broke down and started consolidating. And then that 200-day moving average started acting as support for us. And once we started consolidating, got really, really tight. We almost got a nice cross under here for a bearish move, but no, we got a nice separation. And you can see where we're at now. We have a nice divergence or a big separation between this 50 and this 200-day moving average. Now, when we're looking at cross unders, those are actually considered a bearish move. So you have a short-term moving average cross under a long-term moving average. That's considered a bearish move. Specifically, the 50 crossing under the 200 on the daily is going to be considered a death cross. And that's what happened right here. You can see the purple crossed under that orange line, and then boom, we just immediately tanked. So that's what you're looking for when you're looking at these moving averages. Now, what's the difference between simple moving average and exponential moving average? Well, the simple moving average just calculates an average price of data, where the exponential, it basically applies more weight to the most recent price. So the exponential moving average will follow the prices more precisely. So you can see here that this purple line is a 50-day moving average. This pink line is your exponential 50-day moving average. They're both 50-day moving averages, but you can see this pink line has a little bit more weight to the current price, and you can see that it's actually trading lower than this 50-day moving average. So they both try to smooth out the stock price. So rather than you see you have the stock kind of going up and down here and then this large move here, well, both moving averages sort of smooth out that the volatility in here, but that EMA is actually following closer to what that price is. So when you see we had a big jump here, that EMA went up higher than that 50-day. When we broke down here, the EMA was actually closer to the stock price than here. So utilize both in your trading, because a lot of times they do become supports and resistances. You'll hear us a lot of time on here talking about our next resistance is this fib level, or it's going to be this moving average, whichever one comes first. It is going to be this trend line here, or it will be this 50-day moving average in here going forward, because they do carry a lot of weight. Now, there's different time frames that you can place all of these in, depending on if you're swing trading, scalping, etc. Just you need to research more and figure out which one works for you, and you can utilize these as a combination and go from there. But basically, that's all moving averages are. They just simply aim to smooth out that price, and they can give you little tips and tricks as to, or hints that is, as to where the stock will be trading in the future, and they'll show you any up or down trends. Okay, guys, thanks for watching. Make sure to check us out on social media. We have attached some links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.